Good morning and welcome to your Financial Empower Hour. This is Jason Cryderman again with Great Lakes Investment Advisors. And as you can see, if you're one of my viewers on YouTube, I have my co-host, Mr. Tony Shore, with me. And we also have a special guest. And this is a very familiar face as of lately. Lucky enough to have Keith Gangl back, portfolio manager from Gradient Investments. So those of my listeners on the radio, you're thinking, gosh, I hear those voices all the time. I've never seen those faces. Well, I'm going to tell you right now, listeners, if you are a listener of this show and you have a computer or an iPhone or a smartphone at all, please go to YouTube, type in your Financial Empower Hour, type in Great Lakes Investment Advisors, type in Jason Cryderman. We will pop up on YouTube. You'll be able to see me, my beautiful face for radio, Tony Shore, my co-host, and of course, any of the guests we have, like a real special guest today, Mr. Keith Gangl. So if
who is a looker, I mean, basically,
man, you gave it away, Tony. You gave it away. I didn't want you to say it yet because I want all our listeners to hurry up and go hurry up and get out to YouTube, check it out, and they'll be like, wow.
Disappointed.
No.
That guy's got a face for radio. And I was like, well, we all three of us do, right? None of us should be on YouTube. It's just crazy that we can do this. But so any of my listeners out there, if you have not checked us out on YouTube yet, please do. Check us out, become a subscriber, watch the show for a minute or the hour, whatever you want to do. But love having you guys be our followers. Love having my listeners out there and my viewers. Love having Tony, you as my co-host, and Keith Gangl, special guest today from Gradient Investments. Now, for all my viewers and listeners, I want to get right into the show. I don't want to talk about anything we normally talk about in this first segment because here's why. And Tony's already laughing, shaking his head. And it's okay. So as we record this show, it is Monday morning. Actually, it's Monday at 12:15 on November 3rd. So for all my Spartan fans out there, you know what happened November 1st when our Spartans went over to Minneapolis, Minnesota, played the Gophers, and we played like Gophers. We put our heads in the hole, which was kind of normal. We were horrible. That's kind of my Spartans this year. I'm very disappointed to say that.
Yeah.
But so the Spartans get beat by the Minnesota Gophers on Saturday. And of course, my phone blows up a little bit from Mr. Tony and Mr. Keith and a lot of the other people over there, my colleagues at Gradient Investments, because they're all in Minnesota. They're all Gophers fans. So, of course, they're razzing me, giving me a little bit of the you-know-what. And then I say, hey, just wait till Sunday, boys. Wait till Sunday, okay? Wait till Sunday. The Lions at home hosting the Vikings. Wait till Sunday. We will redeem ourselves over here in the great state of Michigan. Well, my viewers, my listeners, as you know how yesterday's football game went against our Lions and the visiting Minnesota Vikings, it did not go so well for the Lions. It did not go so well for me. Of course, my phone blows up again. Tony Shore's texted me in the middle of the game. I'm like, Tony, I'm trying to watch the game. Quit bugging me. And Keith has texted me, and Mike Binger, president of Gradient Investments, and Nate Lucius, one of the co-founders and owners of Gradient. They're all texting me like, hey, what's going on? Not a good weekend, guys. So,
and you owe me $50. Do not forget.
I think that's what a lot of those messages were about was, hey, that money just shifted from one pocket to the other, and the pocket it shifted from is not mine. But so, yeah, I mean, for all of our listeners and viewers, obviously tough weekend. Michigan pulled out their win. That's always good to see from the big house. But yeah, so Tony, Keith, go ahead, give it at me, give it to me. I gotta eat crow a little bit. I know you want my listeners and viewers to hear this. So
yeah, well,
the mic's all yours.
I appreciate you giving us the congrats on the win. That's for sure. But I was probably as surprised as all the Detroit fans were at the outcome of the game. And I'm a huge Vikings fan. I grew up in Minnesota. I didn't hold out much hope. I know you tried to you said, hey, Lions, $50 on the Lions. I said, no way. You're giving
no way. They're trash. You wouldn't even take the bet.
Nope. I would not take the bet. And then I'm kicking myself, and my wife and I watched the game together, and she's a huge fan. She loves she's on a fantasy league this year.
Whoa,
so
nice.
But anyway, she's a big Vikings fan all her life. And she's like, you should have taken that bet from Cryderman. Why didn't you take the bet? And I'm like, if I had taken that bet, you would have been so mad at me. Why would you take a bet? The Vikings lost, but they won. So, yeah, hindsight is 20/20. But we'll see. We'll meet again.
Well, not only did you, Mr. Shore, not take that little nice polite wager from me that I offered you, but if my listeners think back to 1 year ago, Carson, my son, and Tony, they kind of like to banter each other back and forth between the Lions and the Vikings, and give each other razz each other a little bit whenever Carson's on the show. And last year when Carson was on the show, Tony said, Carson, I'll make you a friendly $5 wager, and the Lions won. Yep. So Carson has been kind of holding that above Tony's head all year long. And a couple of weeks ago, when Carson couldn't come be on the show, but he said, "Hey, Dad, when you record today with Mr. Shore, please tell him I want double or nothing. He owes me $5 and I want more of his money." So I told Mr. Shore that. And I said, "Tony, Carson wants to go again if you're up for it." And you said, "Hey, $5, let's do it." Well, last night, Carson was not a happy camper to realize that the $5 he thought he had in his hand, he was going to automatically turn into $10. It's now zero. Tony Shore owes Carson Cryderman nothing. and my 12-year-old son he's not real happy about this.
Devastated. Yeah.
He thought he was in Shore's pocket a year again. Keith, he really did. He thought he was in Shore's pocket 2 years in a row, man. And then, and then
don't worry, there's another game this year.
You can
get $5 on.
There's another game.
Well, that's what he said. Do you think he'll run it back at the next game? I said, nah, I'm sure, Mr. Shore. If you ask him politely,
we're gonna up it now.
The antes are being up now.
That's good for Carson though,
because I know where
great for Carson.
He'll be fine because I know where that money will come from if he loses.
No. I told him he's going to pull out his own piggy bank. So you be careful how much you wager, boy.
Okay. Well, if it's coming out of Dad's pocket, we're up in the ante. If it's not, we'll keep it at a friendly 5.
And it's staying at a friendly 5. I'll just let you know.
All right.
Investing 101, right?
Yeah.
That's right, Jason.
Yeah. It's like, don't gamble, kids. It's risky business.
And you work too darn hard for your money. And if you can't afford just to shred it up or flush it down the toilet, then don't do it. Just don't do it. A friendly little wager here and there. We love to have, joke about it, have fun. It's a good thing we can do. But again, congratulations, guys. I mean, it was just a Minnesota weekend.
It was.
It's not a Spartan weekend, not a Lions weekend. Tough over here when you're a Spartan or Lions fan. But so I'm glad I gave you guys a couple minutes of your soapbox there, your paddles to the band, and hopefully now you leave my phone alone. Quit blowing up my phone. Quit blowing up my. I mean, I could hardly sleep last night because you guys wouldn't get off and quit razzing me. So it's like,
I have another meme that I'll probably send you.
There's already been 100 or so I've seen coming in Minnesota. Everybody over that gradient's just been blowing me up. So
I'm sure.
Yeah, but it's awesome fun, right? Good times. Yeah. So other than that, though, guys, I mean, Keith, what's been going on? It's been probably maybe 3 weeks or so since you've been on the show last, and I know you're busy with the family and the kids. I know you got remodeling projects going on. Exactly. What's been going on with you, Keith? How's everything been?
Everything's great. Like you said, I got 3 kids in college, so that's kind of nice. Yesterday was my son's birthday, so he turned 19, he came home for that. It was kind of exciting.
It's my daughter's birthday today.
Oh, cool.
23.
Nice.
Happy birthday to both those kiddos.
Yeah, and then we little bathroom remodel still, and then I also went with some buddies, some high school buddies and their wives, and my wife went down to Nashville for my first time a couple weeks ago. So
really?
You've never been to Nashville?
Never been.
Oh, first time. What'd you think of it?
Oh, it was so much fun. And my wife's not a big partier by any means. And, I'm with my high school buddies, so I'll have a few beers and stuff like that. But she's had a great time dancing and the music, whether you like country or different varieties. So it was just fantastic. And then the other thing we did, we actually did a Jack Daniel's tour, like a full day.
Oh, you went to the distillery?
Yeah, we actually stayed on property, which is like a kind of my buddy got billed on a charity event, and it was outstanding. I'm not a whiskey drinker by any means, but it was just a cool, exciting event.
That's crazy.
Good time. Good 3 days.
Huge experience.
Yeah, very cool, man. Very cool. I'm glad the wife got to go with you and enjoy a little bit of
a little R&R. Take a little break now to get back to the remodeling. Wife said we're home. Let's get back to the work.
Now she doesn't want
it yourselves.
Oh yeah.
Oh, you're crazy.
I am. No, she's not involved. She's more of the let's pick up the pace.
Right. She's cracking the whip, right? She's cracking the whip.
And that is great.
And I'm sure, Tony, she's probably also the foreman and the inspector. So she tells him when to do it, how to do it, what to do, where he did it wrong, how to fix it. And by the way, pick it up, right? And let's go. You're not done with this project yet?
100%. And then I wasn't going to watch the Vikings game. I figured they would get destroyed. And I saw the first drive, Lions score. I'm like, well, I can get back to the bathroom remodel. And all of a sudden I was like, oh, guess I might have to watch this game. So that kind of took 3 hours out of the day yesterday.
Yeah. Same. Same. So now you've been the bathroom remodel. You're doing it yourself, and you started it 3-4 months ago.
No, probably about 6 weeks ago, which is funny because coming out of college, I was in the home building industry, helped out anyway.
Oh, wow.
I actually built my own house back in 2000. So
look at you.
Subcontracted out. So yeah, I did that, Tony, in 3 months, the whole house, a nice size house. And now I'm on probably 6 weeks now of the bathroom remodel, and I'm just finally starting to put things back together. So it's going to be another 6 weeks at least. I told her for sure by Thanksgiving, no later than Christmas.
Worst case scenario next year.
But yeah, how did that go over?
Oh, she's not too happy. So it is what it is.
Yeah.
And I'm sorry, how old are you, Mr. Gangl, and how long have you been married?
Yeah.
I would think you'd know better than that by now.
Last week was my 25th anniversary with my wife.
Happy anniversary.
25 years of marriage,
55,
5 years of marital bliss.
It's coming to an end with this bathroom remodel.
Yeah, my brother-in-law and his sister, my wife's sister, got married, very happily married, and I forget, about 5 years in, they decided to remodel their basement bathroom and put in a bathroom and do it themselves.
Yeah.
And they honestly came very close to it. Almost ended their marriage, and now they've been married happily since then. But
those are tough projects.
They probably never remodeled another bathroom, though, right?
Nope. They have not done a remodeling project.
They're hiring that out.
They are hiring it out. Yeah.
Either hire it out or just sell the house and buy a new one. Just start. Don't even go there. Just start over.
Yeah, my wife and I know that better. There was an opportunity for her to possibly work for Gradient at one point.
Okay.
And we talked about it. And we both said no.
That's
Nikki,
we have enough time.
Nikki fully offered her a position. I said absolutely not. And she said the same thing. So yeah, we love each other, but working together is too much of a good thing, I think.
Well, and a lot of people ask me that as of 2 years ago, actually last month, it's been 2 years ago now that my wife, Amy, joined me. And so for the first 21 years of my career doing this, Amy did not work in the office. Now, there were times when we were getting started out years ago, Dad and I, where she'd come help us out at seminars or, really busy, help do some prep work. But she always was a career nurse, was her first career. And then 2 years ago, I had her join me. And a lot of people ask, gee, how's it going? Like, you guys live together, you go to all these sport events with your kids together. Right. Now you're working together too. And it's been awesome. It really has, guys. I mean, I never thought like it's that, gee, I work with my wife. I go home, I'm with my wife. And some people say, gee, I just can't spend that much time with her. And it's a totally different dynamic when you're at work versus when you're at home. Sure. And really, we don't see each other a lot throughout the day. So she's got her office. I have my office. I'm in with my clients during visits. And so it's been really cool. But we kind of had the same thought, Tony, that you and your wife had. If someone would have said, hey, you guys want to work together? No, absolutely.
But, it takes special kind of people. And with you and Amy, you're both great. And I can see it definitely working for you.
Yeah,
too.
It's worked great, right?
But my wife and I, we enjoy our separate careers. And my mom and dad, and I've said this on the show before, but my parents at their 50th wedding anniversary, they got up, they were about to cut the cake, and they had it at this event center in the town they grew up, because it's not a big town. Everybody was there. There's probably a couple hundred people there. And they said, Ruth, 50 years, how did you do it? And she just said, he was gone a lot.
Yeah.
Without hesitation, he was gone a lot. He was an over-the-road truck driver, so he'd be gone 2 weeks at a time.
She wasn't lying.
And then everyone laughed and said, "What about you, Dad or Tom?" And my dad said, he goes, 50 years of marriage, 10 years of marital bliss. So those two,
fantastic.
Those two are hilarious. Still married, 62 years.
Wow,
62
awesome.
years. So we're going to take a quick break and then come back and actually talk about the markets. Since we have the senior portfolio manager from Gradient Investments here, we should probably take advantage. And Jason, I know you've got some great discussion points for him, where I'll kick back and let you two do all the heavy lifting. But first, we're going to give away 10 copies of Jason's book. It's called Empower Your Retirement. It's a great book. And the next 10 people to contact Jason and his team there at Great Lakes, well, there it is. He's got a copy. If you're watching the video, you can see a copy of the book. And that is a great book, Empower Your Retirement. And all you have to do is call, but you have to mention the show that you saw it or heard it on the show. Just call 989-835-7203. That's 989-835-7203. Or go to GreatLakesInvestmentAdvisors.com. Say you want somebody to contact you. They'll get your information and send you out a book. No charge, no postage, no obligation. Get a copy of the book. Now, moving on. We're here with Keith Gangl, the senior portfolio manager from Gradient Investments. He makes many media appearances on national financial TV networks, and now he's here on your show, Jason, your Financial Empower Hour. So where do you want to begin?
Yeah, it's pretty cool again. So to have, just for my viewers and listeners, we do have Keith Gangl, who is senior portfolio manager, as Tony mentioned, of Gradient Investments. Gradient Investments is a third-party wealth management firm that manages money for advisors and their families across the country. Gradient's a pretty select group, as they only work with independent fiduciary advisors. So across the country, when you look at all the advisors that are out there, there's a lot of them. If they're not independent, means if they're captive by a certain firm or a broker-dealer relationship, or if they're not a fiduciary, they can't get access to Gradient Investments portfolios and their expertise and their management. So it's really cool to be part of that team. So again, Tony, it's awesome when we can get Keith, the senior portfolio manager, when we can get Tyler Ellegard, when we can get Lisa will be on the show. And I mean, it's awesome to have you guys as your resources, because Tony, as you said, not only do these people manage money, like you guys are managing right now over $8 billion. That's with a B for my listeners. $8 billion worth of money for advisors and families across the United States. And that is a big, big, big number. Now, not only do they manage money, though, but because of their reputation, because of how well Gradient Investments has done, because of their portfolios and their management philosophy, you mentioned it, Tony, they're extremely highly sought after. Like, they're on Fox, they're on CNBC, they're on Reuters, they're just everywhere. Every week, I think that team is flying across the country. They're being on every single news channel you can think of all the time. So that is because they're in extremely high demand because of what they do and how they manage money. So when we can pull them away from that high demand and we can pull them away from managing that money just for a half hour or an hour, to get them on the show today, to pick your brain, this is awesome, Keith. So thanks again for joining me. What we want to talk about today, here we are, it's November. Okay, when we're recording the show, it's Monday, November 3rd. What I want you to kind of fill us in with is we just had Halloween, right? Trick or treat. Now, there's something I heard you talk about last week on some kind of webinar training you did was, are we going to get tricks or are we going to get treats? What is the economy and the market giving us for October into the third or fourth quarter here? So I want you to kind of start off, if you could, Keith, and talk to us about what maybe all throughout the year, but more importantly, what did October look like? Because we're going to get into then earnings seasons. We're going to get into a government, what I'll call timeout. I called it this last time on the show. I'm going to call it this again. I don't like the word shutdown because the government it's not 100% shut down. It's in a timeout phase, right? And I really look at it as timeouts as a good thing. Hopefully they were at the right timing. And when you come out of timeouts, it's hopefully for a good reason and a good thing. And I'm trying to stay very optimistic about that. So, Keith, I want you to talk to us a little bit about the government shutdown, the timeouts, what's happening and what's not happening. And then we'll end the show with November, December, coming into the end of the year. What does the end of 2024 potentially forecasting look like? And hopefully we can rock off into an awesome, I'm sorry, did I say 2024, 2025? And hopefully we can rock off into an awesome 2026. Keith, start us off with, was it tricks? Was it treats? What was October like? Where are we at today? Where are we moving forward?
Yeah, those are great questions. It should be a great show.
Yeah,
I'm excited. I threw them all at you at once. Usually I wait, but I want you to know that what's the bag of tricks, bag of treats. Deal with it all up front, man. Go.
Let's talk about October. So October, everybody, Halloween, right? So it's like, is the market going to bring us tricks or treats?
Yeah.
And surprisingly, it gave us a nice treat. Just historically, October is the most volatile month of the year. If you go back, last 100 years, the S&P 500, there's a lot of events that happen in October that can be very volatile or spooky, in the Halloween terms. Mm-hmm. But that wasn't the case this year. We got a bag full of treats. The S&P 500, when people are talking about the stock market, they're referring to the S&P 500. That was up over 2% this year. So that brings, to put this in perspective, that a full year now, we're up almost 16%. That's a bag full of treats. Well, no tricks yet. So we'll see. I mean, fundamentals are in place. I'm still very positive on the overall market, especially when you look out, into this year and into next year. We'll get into some forecasting here a little bit later, but so far so good. October, the thing that we had to watch in October is earnings season. You touched on that here a little bit earlier. That's when the third quarter results get reported. So now we've gone from, going back, April, we had tariffs, Liberation Day, we joke here on the show before, is liberated everybody from their wallet for about a month. And then now the market's been setting new all-time highs, which is great. So October's earnings season, we value how the companies are doing. And this is the time of period. We do 4 times a year, about 3 weeks long is. So we're very busy here as well. So we're looking at all the company earnings are reporting, and we've seen some great earnings reports. So the Mag 7 companies, which have been driving the overall market, the AI, technology, the revolution coming, that's been pushing the market forward. So everybody's looking for, is this going to be the end of that? But no, so far so good. In Q3, it's good earnings reports, good guidance. Now we're about 2/3 of the way through earnings season. So that means we have another third left to report in the next week and a half here. So we'll see if that continues that same cadence. But so far, so good. Earnings are about revenues, which is their sales growth. It's about 8%. Expectations were around 4 or 5. So we're exceeding expectations, which is great. Earnings growth this quarter is supposed to be about 5 or 6%. Right now, we're coming in, those 2/3 are about 11%. Those are some big numbers. So that's in part why we got the treats in October so far instead of saying tricks. So we got to keep our eyes open, though. We never know, because this next third of the company's reporting, maybe they'll change their tune. But so far, so good.
So what are some of the variables when you talk about, geez, all these expectations for earnings and growth and profits, and it sounds like most of all those forecasts we're either at them or above them. And so what do we think is, I know we said AI, but there's got to be some other things other than that, or is that really it? I mean, what's contributing to that?
I would say that's a big part of it, but there's other stuff. I think corporations just in general have found ways to be more efficient, so it's their operating margins, which contribute to the overall EPS growth rate. That's been better. And now we talked about the sales growth of, that 8%, but earnings, ultimately, if I had to pick one factor, what drives the overall stock market over long periods of time, it's earnings growth rate. And if you go into this year, expectations were around for that 12, 13%. We said that's too high, maybe around 9. And so as, mid part of the year, expectations went from 13% down to about 9. Now they're reaccelerating. They're at about 10.5, maybe we're going to exit this year at 11, which again, historically, if we're at 5 to 6%, that's a good backdrop. So if we do 11 this year, we have one more quarter left where things are looking pretty good. Then what we're looking at, what happens in 2026, those earnings forecasts, what we're hearing now on these conference calls are expectations of around 13%. That's fantastic. After, if we do finish this year at 10, 11, do 13. Now, I think that 13 is a little too high for next year, my initial take. So even if you dial it back to that 9, 10%, that's above average. So that's a nice tailwind. So I think companies, it's part of it's AI. There's becoming more efficient. I think the economy is generally still pretty good. I mean, we have one of the things, the job market is slowing a little bit. Unemployment's at 4.3%. So
and I keep hearing about layoffs, and I wonder if that's going to trickle down and affect the economy, or you keep hearing these news reports, this company's laying off this many people, and you wonder how that's going to.
Yeah, there's a fine balance, because I always say unemployment, the consumer, no one could spend like the U.S. consumer. So if the if the U.S. worker's working, they have money in their pockets, they love to spend. So that's why we do have to watch unemployment if it ticks up. But even at 4.3%, just to put that in perspective, the 25-year median in the last 25 years is 5.1%. So even and the 50-year low is 3.4. So we're closer to 3.4 than we are to 5.1. So that would be still pretty healthy unemployment. But you are seeing some signs of layoffs. And there's certain categories with, back to this whole AI discussion, there's certain jobs that if I had a job that was AI related, Tony, and you and I have talked about this past, like an entry-level programmer, I think a lot of that stuff is AI is going to take those jobs. So if you're going to school for that, that might be a tough career. If you're a technical writer, a lot of stuff is when you do it, it's easy to run it through a chat GPT or whatever your AI service is. and it can do all that editing for you. Same thing with, when we write stuff here. I used to write stuff, then I pass on to another portfolio manager. It would correct it for another hour or two. It would take them. Now, after I write it, I can send it through an AI editor. It makes it it tightens it up a little bit. Still my writing, but it saves that time. So if I was a technical writer, that would be a tough career as well. But point being is AI is making now that time that the other portfolio manager would spend, he can go back and look at stocks and the macro environment. So it just makes it more efficient. Not like that. We don't need that job anymore. Just you have to pivot a little bit.
What if I were replaced by an AI? Oh, I have been. Oh no.
I think Jason might go, that might not be a bad idea.
That actually wouldn't be bad. That voice was a heck of a lot better than the normal guy.
Oh, come on. Come on. These golden pipes. Oh, AI, they have started using AI for announcers. So you're right. I mean, but the areas where we see it, like, customer help desks,
call centers
would be
the one that's kind of a big target.
I know Target Corp in Minneapolis, where Gradient's located, announced they were laying off
1,800, I think.
1,800 from their corporate offices, not from their retail locations. But
and the one difference I'd say now versus, if I've been doing this for over 30 years, is a lot of times you see these layoffs are kind of on that lower end blue collar economy slowing down. I think what this AI is partially going to replace is some of those white collar jobs at kind of that mid-level. Program I would say is kind of, mid to upper level.
Mid to higher levels, yeah.
Yeah, those are, so that's the one thing we'll have to, those, I think what people are just going to have to pivot. I mean, there's going to be maybe, structurally more of the demand of, your plumbers, your electricians, your HVAC guys, which they do fantastic work. And those aren't things that AI can replace. So
right.
I think that we'll see some kind of pivoting there, which I personally, I think that's a good thing. It's a lot of building products,
moving to the trades.
Absolutely.
That's a big thing that I'm keeping an eye on as well.
Awesome. Well, hey, we need to take a quick break here. We're just going to offer once again 10 copies for the first 10 people to contact Jason's office. Empower Your Retirement is the book. He's holding it up for our viewers if they're watching the video. It's a great book. All you have to do is call 989-835-7203. That's 989-835-7203. They'll send out a copy of Jason's book at no charge, no postage, no obligation. And you are listening to Your Financial Empower Hour. I am your co-host, Tony Shore. I'm here with our host, Jason Cryderman. And Jason, huge guest today, Keith Gangl. Keith's been telling us all about what's happening here, what's going to be happening in the fourth quarter. Is there going to be a Santa Claus rally? Don't they call it that? I don't know how legit that really is. But in December, the markets get bumped up because of Christmas spending. Is that true?
Yeah, no, that's historically, we're going into the strongest part of the seasonality of the markets. We just got through the most spooky time, and Halloween is kind of, October is the most volatile. And then September is usually the month that's kind of the worst month of the year. So those two are actually back to back positive. And then the next 2 months, historically, we kind of use it as a guide to kind of know what's kind of what happened in the past. They are the strongest 2 months, back to back. So we'll see.
Yeah, and I think you're right, Tony. A lot of that has to do, from my experience anyhow, is we've talked about what drives the market. Well, it's consumer spending and corporate profits, right? I mean, we spend money, corporations do well. What does everybody look to do this time of year? Whether it's all the decorations for Halloween, all the Halloween candy, and then it's all the Thanksgiving. And what do? We travel. We buy a lot of food and we buy a lot of decorations. And then we have Christmas. And what do? We buy presents and we travel and we buy food. And so there's a lot of spending. When there's spending, that's positive for that side of the market equation. And generally when we're spending, that means corporates have an opportunity to have more profits. So you call it that little Santa Claus rally, Tony. You're right. That's what it's been nicknamed as. Is coming into the fourth, or coming out of really the fourth quarter, is did we benefit from a Santa Claus rally? So it's going to be interesting when we talk about this last segment, Keith. You talked about how like earnings forecasts and growth forecasts and all these numbers that in these earnings seasons, right, that most of the results are coming in above expected, above forecasted. That's a good thing. That's a really good thing. But now let's shift and talk about this government timeout. Is this potentially having a short-term positive impact on some of these areas and sectors that's keeping us in the positive realm. And one of the reasons I say that is because I know in my personal life, I don't want people having all their hands in my business. And something I've heard over the years is when the government shuts down, corporations usually do pretty good because now they can just go and grow. They don't have to worry about the government being right there and telling them what they can do and can't do and holding them. They could just go and grow, right? So that could be a positive thing. But I want us really to also talk about this government timeout. What the heck's going on? How long do we think this can last? What might be some of the positives that could come out of it? But what are some of the things? My tagline of my book is plan for the best, prepare for the worst. So we can't just always talk about positives. We have to be realists, and we have to talk about potentially very bad things, the worst. Be prepared for the worst. So if we can talk about that, let's forecast some of the not so goods, some of the bad things that might come out of this to help myself, my listeners, and my clients be prepared, right? Plan for the best, but prepare for this might not be so pretty coming out of 2025 and into and through 2026. What do you think, Keith?
Yeah, that's a great subject. So let's throw some numbers at it, just put it in perspective for all your listeners. So since 1976, we've had 22 shutdowns. So, and they're uncommon, every few years, government can't agree, they shut down. But the big takeaways are shut down on average, very short, 8 days. We're going on 34, 35 days right now, which if it goes above 35 days, which it looks like it's going to, that would be tomorrow as of the recording, that's going to set a new all-time record. So the longer it goes on, the less data we get, the more nervous I think investors could be. So part of the reason, generally speaking, the markets during shutdowns are positive because they're short. They're 8 days on average. Typically, your furloughed employees, when they get their job back, they get back pay. Now we're over a month. So some people have missed maybe 2 paychecks. Some people are essential versus non-essential. I don't like how they term that. So some are working and not getting paid. Some are at home not getting paid. So we'll see. Just to put that in perspective, though, so that's about 2 million kind of federal employees. So in the U.S., we have about 163 million employees. So 2 million out of 163, it's a little less than 2%. So it's not great because every person spending matters, right? Because spending makes up about 70% of our GDP growth rate, and that's the flywheel. Again, if you're working, you have money in your pockets, you will spend. Now, for those 2 million people that are at home not getting paid, there's a question if they even get back pay, which I assume most will, but there's some potential that some of those 2 million won't be recalled the longer it drags on. Maybe to your point, Jason, decide, no, maybe that part of the government we don't need necessarily to have back. So we'll have to keep a close eye on that. So things are right now, if I had to guess, I would say hopefully the next couple of weeks it's reopened. Again, that's just me kind of reading the tea leaves of what's going on and certain time frames that, okay, now we've set a record for the longest. Both sides can say point at each other's fingers. But I think at the end of the day, rational heads will say, let's get these 2 million people back to work. They need to be there. Let's get them working. There's stuff like, for example, you're starting to hear one thing that makes me a little nervous is you talked about, flying somewhere, TSA. So those workers are actually working, but not getting paid. So at some point in time, if you're 2 months into a job working, not getting paid, you could see these, walkouts or.
Well, yeah, at some point in time, it's, wait a minute, we're going to call our own timeout, right? We're going to call
our own timeout.
We're going to go on our own. I'll work for you, but I'm not going to work this long. And especially without any, who wants to work a month and not get a paycheck?
Yeah. So and that's where I think that could potentially, I don't think we're there yet, but I think a few more weeks there, that you hear that. And all of a sudden, the longer it goes on, the less certainty we have, the more nervous investors will get. The other thing that, everybody is getting their Social Security checks, which is great. So that was one of the fears when the government shut down. I don't get a paycheck. That's not the case. The other thing, just so you know, Jason, if you have taxes due, the government is open to collect your taxes still.
Oh, isn't that interesting? Isn't that interesting?
Funny how that works.
The IRS doesn't shut down.
They shut down parts of the government. They tell people they go to work, but you can't make money. We're not going to pay you. Yeah. But they're going to keep that door open, the IRS, that brings money into the government. Their only source of revenue, right? And so, isn't that convenient? The part of the government they didn't shut down is to take our taxes.
And I'm pretty sure Congress gets paid during
They
this
do,
time.
And there's rumblings that couple people are pushing that they don't, which when they start impacting, they shouldn't. I think
they shouldn't be allowed, and they shouldn't be allowed to take a break. They've taken 2 or 3 breaks during this time already. It's like, no, you don't get a week off when the government shut down. You're essential. you're an essential worker. You need to be in there and
You're
not
working
get a break
and not getting paid.
and
like
not
some
getting
other
paid.
people. So then I think that would change things when they actually
I
start
think it
feeling
would
their own
change things
pain
in a
too,
hurry.
so.
Yeah, I think it would change things in a hurry.
So it's something that we're definitely keeping an eye on. I do think it's going to be over shorter rather than longer, which again, I think then what we'll focus on as investors and, working with you, and you do a good job with your clients of allocating the resources is, the market's gonna be open. Now let's focus back on company earnings. What's the forecast? What's the outlook? What's the Fed doing? Which is kind of tied to this shutdown as well. We're not getting government data now that the Fed, they're raising and lowering interest rates depending on economic data.
They just lowered them again.
We just lowered them last month, another 25 basis points. So directionally, they're coming down. Now the question is, how far are they going to come down? Part of that's depending on where inflation is. It seems to be not the Fed target of 2%, but it's under sub 3%, which is tolerable, better than 9%. So.
Yeah. Well, hey, we do need to take one last break. So I'm just going to give that phone number really quick one more time so we can continue this discussion. If you want to call to set up a consultation, there's no charge or obligation, or get a copy of the book. Jason wrote a book called Empower Your Retirement. Just call 989-835-7203. That's 989-835-7203. And you're listening to Your Financial Empower Hour. So, Jason, what's the next question you have for Keith since we got him?
Well, it's an awesome time to have Keith right here at the end of the year. We talk about, we've come through a really great year. Keith, you've already thrown out some stats and numbers of what projections for this year were last year, and they were a little high, and you guys at Gradient thought, well, that might be a little high. We should dial them back. And sure enough, everything's coming in right about where you guys said, or maybe even just a little higher, which is good, right? That's a surprise. That's good. But we also have to talk about those things that always aren't so good, right? Because interest rates, everybody wants higher interest rates when we invest money. I want to put money in a CD and make 10%. But then when I borrow money, I want to pay 1%, right? And it's like, well, that's the whole have your cake and eat it too, right? So interest rates are a double-edged sword. So we got to talk about it's a good thing when we can see interest rates come down to borrow money for growth. And the Feds kind of have this game plan with interest rates where they want it to be, but it's not such a good thing for investors who have been comfortable for the last 6, 12, 18 months getting 5% in the 3-month or 6-month CD. That environment's going to change as well. And when we ended the last segment, a lot of it was, the Feds just lowered interest rates another 0.25%. And they did that semi-blind. I think we could all agree on semi-blindly, because they haven't had data for 30 days before they made that decision because the government's shut down. But they had data leading up to that. They had a good indicator. So they were semi or partially blinded to make that decision. They were confident enough to make the decision, lower interest rates 0.25%. However, a lot of their wording and their talks during that meeting were, we don't feel so comfortable and confident with, if we go on much longer with more lack of data, that we don't know if we're going to be able to continue the cuts that we said we were. So there's a lot of unknown there, a lot of uncertainties. And I know I don't like uncertainties. My clients don't like uncertainties. We all know the Wall Street and stock market doesn't like uncertainties. Right. So let's talk a little bit more as we finish up this show here today, Keith, about the government timeout, government shutdown, potential of what that looks like, potential of interest rates. And then let's really just kind of talk about our year-end thoughts, overall market, get out of that kind of black hole, the government shutdown. Let's talk overall market. What's it going to be looking like, potentially forecasting for the end of the year, and what might 2026 bring us in the market and the economy?
Yeah, love it. So great points. The Fed, obviously you're exactly right. Interest rates. I mean, if you're retired, you have money in a CD, higher rates are good. Now, when the Fed's cutting, those, higher rates are going to come down. So you won't be able to make as much, but that stimulates the overall economy, which again, that's consumers are working, money in their pockets, they spend. So it's a big circle. And right now, the government's not getting data on unemployment. So the last month we had was, over 40, I guess, days plus was 4.3%. People are kind of guesstimating, non-government services. We're still around that 4.3%. So not terrible, right? I expect that probably goes to 4.5, a little higher than that, maybe over the next 6 to 12 months. So slightly getting worse, but not horrible. And then it's the dual mandate of the Fed. So if inflation's going up, they don't want to be cutting rates. So we have inflation kind of sticky around at 3%. We don't know what the jobs numbers doing. to your point, that's why the Fed kind of signaled the next meeting is December. If we don't have any more data, they won't know what to do, and then investors don't know what to do. It causes more uncertainty, which could potentially maybe have a little bit of a pullback in the market, which, again, pullbacks are normal. They're corrections. We just haven't had that many recently. So would I be surprised if we see some kind of correction before year end? Not really, but I still think fundamentals are in place. The earnings, everything goes back to the earnings. If earnings remain strong through the end of this season, guidance remains in good place for next year, next quarter. I think the markets, if you had to ask, kind of grind higher from here, but it won't be a straight line. There'll be some kind of news, whether it's the government shutdown, the Fed, there's things like that to consider. So I think, we're still set up for a good year. And then, that's my crystal ball in the short term. So then when you look out into next year, 2026, that's what when you're planning with your clients, right? You're planning out 1, 3, 5 years, 10 years plus.
Absolutely.
You do a fantastic job working with your clients. I mean, you allocate them appropriately, right? You, just like you said, prepare for the best, and make sure that the worst doesn't happen. That's how you prepare your stuff. And that's exactly what you're doing. So that's what we do as we're managing portfolios as well. We're hoping for the best, but we're planning on if some pullback happens for whatever reason, we have some allocations there to things that stocks and ETFs that can do well on a pullback. So that's how we're looking at the world right now. And there's a lot of moving parts.
Yeah.
And we'll see what happens.
That's awesome. Well, I'll tell you what, we're almost out of time for today's show. Jason, it flew by. Keith, some great info. We'll have to have Keith back on again soon. Jason, is there anything else you want to add before we go?
Well, other than I hope, after the next time my Spartans play the Gophers, it's a better outcome. The next time the Lions play the Vikings, it's a better outcome. If it's not, I'm gonna shut my phone off because all these Minnesotans over there and the Gradient people, they're just blowing me up with me, and I don't deserve it. Okay, guys, I just So no, I think it's been an awesome show, and these are great topics to talk about. For any of my viewers or listeners out there, if you have other questions for myself or another member of my team about your portfolio or about different choices or options or investments you have, or getting a copy of the book, or maybe you'd like me to do a stress test or second opinion on your current holdings, or you have questions for Keith Gangl, the senior portfolio manager of Gradient Investments, about anything that has to do with the markets, the economies, or your money, please just give us a call. Myself, my team, Keith and his team, Tony and their team, they are 100% wide open to phone calls, visits. We can definitely help out if you have questions or concerns. That's really the whole purpose when I became a financial advisor 23 years ago, why I authored a book, why I have a radio show, is simply to be a resource and help people. So if you have questions or concerns, you need help, please let us be your resource. Guys, thank you for an awesome show.
All
go
right.
Spartans, go Lions.
Go Vikes. All right.
No. Hey, one thing before we go, I make a shameless plug for the YouTube. I mean, the book movement you had today, if you got to watch this show, it's fantastic.
Yeah.
Jason did a good job with that dancing book.
There
it is.
The dancing book.
Love it.
I love it. All right. And that does it for today's episode of your Financial Empower Hour with our host, Jason Cryderman.